This is the Daily Market Rundown live from the Tradelo trading floor. It's February the 25th. Some highlights from today's show. Tariff threats are looming large. The dollar is about to dump, and sentiment is now very fragile. Good day, traders, and then welcome to another day of trading. Let's get stuck straight into it. Quite a lot of things happening. Of course, we had a very, very weak close in the S&P 500 yesterday, closing below that 51.10 area of support, and that really does open the door up to a very volatile trading session this afternoon. We can see that there is a lot of nervousness out there. There's quite a few things going on, so let's get stuck straight into it. The first thing to talk about today is, of course, we do have Trump back with the tariff threats labeled at, of course, Canada and Mexico. Don't forget, he gave Canada and Mexico 1 month to get their act sorted. The result was ultimately they have done some part of the agreement to beef up security at the border, but not necessarily enough. And in Trump's eyes, what he's told us ultimately is that he is going to, well, the plans are that tariffs will be coming into play next week, Tuesday, the 4th of March. And of course, what he wants is to get more concessions out of the likes of Mexico and Canada. Now, what we can see, and I think this is the key takeaway, if we go and look at the grid of currency performance, what we can see on the year right now is that CAD is down just shy of 1%, with the Mexican peso down 1.5. And of course, this month particularly, we can see they are both down quite a lot relative to the likes of the euro, which is up 1.28, and the pound, which is up 2%. Okay, now the reason I'm mentioning this is because it almost looks like the way the market's interpreting this is a little bit of hedging going on in the CAD and Mexican peso, given that the 4th of March is the first event to happen. Okay, don't forget, he is targeting Europe as well, but it looks as though those targets or those tariff discussions are going to be something of the future. So right now, it's very much, we are seeing a bit of hedging going in the Canadian dollar and Mexican peso. More likely than not, we're going to get some form of upping of the rhetoric. In other words, a little bit of escalation in the rhetoric next week as we move into that 4th, and then perhaps another extension of the deadline. So that's kind of the play now, is you've got to look for that headline news, look at ultimately what Trump is saying, and ultimately what happens, of course, next week. Now, turning our attention, of course, to the next key headline news, there is a growth scare going on. This is across the board now. We are seeing this discussion across Wall Street. It is this idea of a growth scare. It started on Friday with a very bad Michigan data. We've, of course, had the uptick in inflation expectations at the same time. We are seeing sentiment sour from the likes, of course, the PMI data coming in very, very weak last week on Friday. Now, the key takeaway, what we're seeing is quite a lot of flattening in the US bond space. We are seeing outperformance by US bonds, and that does point to a economic slowdown, or at least some degree of pricing of an economic slowdown. And that's the general thinking of the markets. Now, to showcase that, if you look at this chart, you can see break-even inflation has dropped 20 basis points in the last couple of sessions. And if I just cast your minds back to July last year, July, August, you can see we had that same sort of dumping in the break-even expectations. At the same time, we, of course, saw 10-year yields dump from 4% down to that 3.5%. So we are seeing a similar repeat play to July last year. The play back then was you want to be long the back end, look for that steepener play. As well as, of course, you want to look for short the dollar. Now, that play, we're going to get to that in a moment, but that is looking like the obvious play for today, which is looking for further flattening, particularly as participants buy the back end of the curve, and at the same time looking for the sell in the dollar space. Now, that being said, I think gold was an interesting one in the green. What we can see is that gold did drop $60 at the same time, and that's why I think gold is very, very vulnerable today to perhaps a drop all the way back down towards that 2,900. It's about another $40 to $45 lower from current price. So keep an eye on gold. It does look like one that will also pare down, similar to what we had, of course, back in July. Now, turning our attention to the dollar, I think this is a key one to pay attention to. If we just looked at yesterday's daily candle, we would look at this and say pretty darn bullish close. Market should trade back up towards that 107 quarter level. And that's kind of technically how you would look at this as a trader. We are back inside, of course, that very key zone of 105 to 107. However, and I think this is the caveat, is that I think a lot of people did buy that dip yesterday. A lot of people are very long dollar this year. Of course, we know that's a consensus play for Wall Street, which is long dollar. And I think the key takeaway, of course, is that bullish price action yesterday, should we take that out today? Should we, remove that low in the Dixie today, just around that 106 quarter level? That ultimately will open up the floodgates to a deeper drop to that 105.50. So I think this is a market to pay very close attention to. Like I said, given what's going on with this growth scare, dollar is a sell. We know that the positioning is very, very long dollar. And ultimately, I think that positioning is going to get tested perhaps today, but definitely at some point this week. So keep a close eye on, I think, the price action today. We are seeing a little bit of a trend day form in both the euro and the pound. And like I showed you earlier in terms of those charts, if I just go back, okay, you always want to trade the market with strength. What's got strength? Well, we can see pound is the key G7 at the moment. It's the key leader against the dollar. So that's one you want to trade to the upside. And second to that, perhaps, is the euro. So keep a close eye on. Those are two markets, I think, that you can trade as a trend day to the upside should we start to see that dollar come under some sell side pressure. Okay, then turn our attention, of course, to BTC. It is down quite a significant amount, just over 5% currently. We're down 13% this month. Again, what triggered it? Well, this is very much a technical play. There's not much in the way of fundamentals to drive this. It is just very much the market is now washing out a couple of stale positions. You can see we sat in that 94 to 97,000 range for a good 3 weeks, nothing going on, and all of a sudden it triggered yesterday overnight and into today, and we've seen that little bit of a flush out. Now, technically, you would look at this and you would say, well, it does look pretty darn bearish. We are below that key little support level. However, the flag maintains, so long as this low volume area between 74,000 and 88,000 remains, this is a flag and this is still a very bullish structure. So I think the key takeaway from Bitcoin today is, yes, as a day trade, I think you're looking for shorts so long as we stay below that 91,000. I think you get back above that 91,000, you can confirm not just that that is the low tick, but effectively we're going to make our way back up towards the top end of that flag structure around that 110,000. So very much a market that's bullish, it's constructive. Very often what I say to traders, particularly with these big time frame sort of structures, is that you've got to wait for a little bit more time for it to confirm the break. Okay, so if we close below 88,000 today, yes, I do suspect we are going to slowly but surely move our way back down in towards that 75,000, fill out that low volume area before perhaps spending some time in this new range of 75 to 85,000. So that would be my base case scenario should we close below the 88,000 today. But like I said, if Bitcoin gets back up above that 90,000 today, everyone and his dentist is going to be buying it, including myself. So keep a close eye on it. It's very much a market that is under attack, of course, today. And then finally, our final chart is all about the VIX. And this is a key sentiment one. I think this is what I want to stress here, is that the markets right now are nervous. We've got that little bit of growth scare, and the VIX is confirming that nervousness. Okay, a VIX at 19 tells you you've got to be very, very cautious trying to buy dips. It's not the market to buy dips now. Nervous markets are markets that can move a lot more than you expect. You can see now we are, for our third day running, posting a green VIX candle, which is very unusual. Okay, if you go back on a daily chart and go and look, we don't have these sorts of structures very, very often. So when they do come, what they're typically going to do is some form of a, another higher low and higher high. And at some point, we will get that little bit of a spike up in the VIX. So keep a very, very close eye on it. The sentiment's weak. Like I said, you don't want to be fading the markets now. You don't want to be a buyer of equities, not right now. You will need that VIX to get back and close back below that 18 level. And then perhaps maybe we start to see that positive sentiment return. But right now, it's not a market. You don't want to be fading these equities. Like I said, we've closed below that 6,010 level in the S&P. I suspect that does get tested again today. And on that note, of course, if we look at the three indices, the Russell, the NASDAQ, and the S&P 500, the weakest yesterday and moving into today is actually the NASDAQ. So the tech is leading this. And in particular, if you go look at the Mag 7, they were all blood red down yesterday. The likes of our leader, Meta, which has been the best performing in the market this year, was down yesterday, 2.26. It was leading the down move. So when the strongest is weak, it tells you everyone wants out. Mag 7 is leading this down move, and that's why I suspect there's a whole lot more to come today. Right. On that note then, Just one final word. We don't have any key headline data today in terms of the economic space. We've got a couple of key speakers, but I think the key focus is going to be all about risk management. It's going to be all about managing this volatility. There's a lot of work to do here. Like I said, there's Bitcoin, there's the dollar, there's the S&P 500, there's the bonds. There's so many things to do today, but the key takeaway is you've got to know what you're doing and you've got to make sure you're managing that risk. So keep it tidy, keep the structure there. The market will come to you. It'll give you lots of tradable opportunities. And most importantly, and this is a little tip for you, when there's heightened volatility, naturally you're going to overtrade. So be aware of that. If you do find yourself getting drawn in, sucked into sort of a lot of choppy type movement, take that step back and then start all over again. Okay, that's a wrap for today. Good luck out there. If there are any other questions, do post them in the Discord channel. Otherwise, catch you on the other side. Good luck, manage that risk, go make some money.